Title: Mastering GBPUSD, Top 3 Scalping Strategies for Volatile Markets. Are you struggling to navigate the wild swings of GBPUSD? In today's video, I'll reveal my top 3 scalping strategies tailored for volatile markets. Packed with technical details and live examples, these strategies are designed to maximize your profits. Let's dive right in. Why GBPUSD is perfect for scalping. GBP high volatility and tight spreads, making it perfect for scalping. Its rapid price movements create numerous trading opportunities, especially during the London-New York session overlap. This pair is highly sensitive to economic news like UK GDP reports, Bank of England interest rate decisions, and US non-farm payrolls. By timing your trades around these events, you can capitalize on big price swings. Always check the economic calendar and avoid trading during low liquidity periods, like the Asian session. Envelope scalping with trend confirmation. The first strategy uses envelope scalping with trend confirmation. Chart setup. Use the 5-minute time frame for quick entries and exits. Indicators. Apply the envelope indicator with the following settings. Moving average, 20-period simple moving average SMA. Deviation, 0.5% for the upper and lower bands. Color the upper and lower envelopes differently for clarity. Trend confirmation. Add the RSI with a 14-period setting. Only go long when RSI greater than 50 and short when RSI less than 50. This prevents trading against the prevailing trend. Entry rules. Buy setup. When the price touches the lower envelope in an uptrend and RSI greater than 50. Sell setup. When the price touches the upper envelope in a downtrend and RSI 50. Exit rules. Stop loss. Place it just outside the envelope 10 to 15 pips away. Take profit. Aim for a 1-to-2 risk-reward ratio. For example, if your stop loss is 10 pips, set your take profit at 20 pips. Pro tip: this strategy works best during high volatility periods, like UK economic news releases. Avoid sideways markets as false signals are more frequent. Breakout scalping during London-New York overlap. Strategy to focuses on breakout scalping during the high volatility London-New York overlap. Chart setup. Use a 15-minute time frame to identify consolidation zones before major breakouts. Indicators. Support and resistance levels. Manually draw key support and resistance levels from recent highs and lows. Volume indicator. Apply the volume oscillator to confirm breakouts with increasing volume. Entry rules. Place pending buy and sell orders just outside support and resistance levels. Buy setup. Triggered when the price breaks above resistance with high volume. Sell setup. Triggered when the price breaks below support with high volume. Exit rules. Stop loss. Place just below the breakout level for buy orders and above the breakout level for sell orders 1520 pips away. Take profit. Use a trailing stop to maximize gains as momentum continues. Risk-reward ratio. Pro tip: to minimize false breakouts, wait for a 2-candle confirmation beyond the breakout level before entering. This reduces the risk of price retracing. Momentum scalping with moving averages. The third strategy leverages momentum using moving average crossovers. Chart setup. Use a 1-minute time frame for fast-paced scalping. Indicators: 9-period EMA fast moving average. 21-period EMA slow moving average. Volume confirmation. Use the Chaikin money flow CMF to verify strong buying or selling pressure. Entry rules. Buy setup. When the 9 EMA crosses above the 21 EMA and CMF greater than 0. Sell setup. When the 9 EMA crosses below the 21 EMA and CMF 0. Exit rules. Stop loss. Set just below the recent swing low for buy orders and above the swing high for sell orders. Take profit. Aim for quick 10 to 15 pip gains or exit when the 9 EMA crosses back. Pro tip: this strategy is highly effective during momentum-driven market conditions, like when major economic data is released. Avoid using it during choppy, range-bound markets. Risk management tips: 1 minute. Scalping is fast-paced and risky. Here are some essential risk management tips. Position sizing. Risk no more than 1% of your account per trade. Use a position sizing calculator to determine lot size. Risk-reward ratio. Always aim for at least 1-to-2 or 1-to-3 risk-reward ratio. This ensures profitability even with a lower win rate. Stop loss discipline. Never trade without a stop loss. Set it based on technical levels, not emotional decisions. Avoid overtrading. Limit yourself to a maximum of 3 to 5 trades per session to avoid burnout and emotional trading. News awareness. Always check the economic calendar to avoid unexpected volatility spikes during news events. That's it for today's deep dive into GBP USD scalping strategies. Which one are you excited to try? Let me know in the comments below. Don't forget to like, subscribe, and hit the notification bell for more in-depth Forex trading tips. Thanks for watching, and happy trading.